I want to read you what Barclays wrote last week. Measures of equity valuations are now at 2000 dot-com bubble levels and appear to be pricing in an ideal scenario. They go on to say we're reluctant to chase it. Year-end target 3,100. Would you push back on that?
No. As a matter of fact, I disagree with what was just discussed a few minutes ago. I think we are in a dangerous zone. I mean, when you have companies going public and tripling from their offering price, when you have a series of these companies, we've had IPOs all throughout this early part of this year that have just jumped to enormous premiums, and any exogenous event can have an impact on those kind of increases. And it seems the public has an enormous appetite right now to buy stocks, and I just wish I knew how many are well informed on what they're doing, or whether they're just trying to go along with the trends. But I think we're in a precarious territory. I think we're certainly vulnerable to further decline. When you see companies like Zoom up 500%, selling at 500 times earnings, I mean, you got to relate it. I mean, I think people forget that 500 times a P/E ratio of 500 means it will take, in effect, 500 years to get back what you paid. Now, obviously, it's betting on a very high growth rate. You used to have a P/E ratio that related to the growth rate. If you were growing at 50% a year, you could sell it 50 times earnings. We're now in the stratosphere on so many of these companies, and the backlog of IPOs just doesn't decline. And tech is hot, and you could say you can't find a trend. On the other hand, at some point, someone has to pay the piper. I've been through so many of these cycles, and watched just when everybody is so excited, and it can only go up, and that's the general conversation. Something happens, and with our presidential elections coming up, and with the president we have today, every day is a new unexpected event. So I would say this is a good time to be cautious.
Now, Alan, obviously the classic retorts are there. There's where else do you go? Valuations are naturally elevated in the beginning innings of another either bull market or at least a structural bull story like we have in technology and software. So I don't think you're saying structurally that the fundamentals these stocks began to trade on at least are no longer valid.
No, but I think that we're living right now at a moment in time where everyone is very excited about anything you use in the home, and there's kind of an extrapolation. I think I heard it say earlier today with COVID coming back in Europe and presumably going to get stronger again during the winter months here. Well, Zoom should go up because people will continue to stay home. At some point, people, I believe, are going to go back to the office, and companies are going to do more in-person meetings and less video meetings like we've all been able to do. They'll do less exercise at home and more back in the gyms. So I think that we've had an enormous shift, online learning, online entertainment, watching more videos, having business meetings online. We shift back, and the aftermath, we don't know what that's going to be. I mean, I drove down a major thoroughfare. I know you have a national audience, but I drove down Queens Boulevard, which, for anyone who doesn't know, that's like the Broadway of Queens, borough of New York. And I was overwhelmed by the number of store after store after store that is closed up or has gates on it that will probably never open again. We don't know what the long-term impact of those closings are going to be, and what it's going to affect on our whole society. So I think I just think this is a good time to be cautious. I'd be, if it was a great desire to buy stocks, I don't follow stocks, as you know. I deal in the private market in young, new, aspiring companies, growth companies, at early stages. I kind of stick to more traditional, basic portfolio, just to sleep better at night until we get through this election period. I mean, what's going to happen between now and November, and then what's going to happen between November and January 20th is going to be a lot of surprises.
Yeah.